Good morning. Welcome to the stream. This is the first stream for the week. Yes, so we didn't stream on Tuesday last week, this week, because the market will be going live. So, what do we have here? So, from the previous streams, we've been bullish on dollar because there's no reason to be bearish on dollar because we've already taken sell side here from the weekly time frame. So sell side was taken and price traded to this bullish order block here, which is the last down close candle that took out this sell side. So price traded back down into this bullish order block. I was in Michael's stream yesterday, and it was actually comforting because making live videos is actually harder than anticipated, like harder than people think, because you can't edit your mistakes, and when you get tongue twisters or you say what you don't want to say, stuff like that. So back to price action. So traded back down into this bullish proportion block, which is this other block also, and rallied higher. Let's take out this. Okay. So this is buy side. This is our target from the weekly time frame. So our long term buy side. So we traded back down into this fair value gap created on the week of March 18th. So we traded back into the fair value gap and rallied higher yesterday. So this is what we have here. Sell side pushed, rallied higher, traded back into the fair value gap. From the daily here, these are relatively equal highs. Later we see these highs as resistance. So this is what we want price to do. We want price to trade to it and through it to push out this buy side liquidity. The sell sides were stripped here from this relatively coils. So the sell side liquidity there that was taken. And as you can see, there's a market maker buying model forming on the daily. The first stage distribution, second stage. So the first stage accumulation, second stage accumulation. Going towards this original consolidation, which created a relative equal idea. So this is why we've been bullish on the dollar. So yeah, this is the bullish order block. When an order block has wick like this, has a long wick like this, and it is another block, it is beneficial to use the wick of the other block, to use the wick of the candle. So the midpoint of the wick is the consequent encroachment. These are also imbalances. So this is the CE of that block wick. the daily order block week. So on Tuesday, we traded below this. We traded to the consequent encroachment of the other block week. Then on Wednesday, we rallied higher. We will be diving below the. So this is the imbalance we're currently trading inside. Trading inside this imbalance. Favorable gap on a discount from this daily favorable gap. Yeah, this BISI. This is favorable gap in a discount. So for the SIBI, this is the premium price range and this is discount price range. Because yesterday was a large value day. You should be nimble with your expectation of price action, because after an expansion, price generally goes back into a consolidation. Then after that consolidation, it will move to either a retracement or a reversal. So we are not expecting a reversal here. So if it does retrace, it should retrace to go higher. So we are currently at a consolidation. So let's see the PS. Yes, it's doing. As you can see, we took out this buy side liquidity, traded to this bearish order block and the 4-hour time frame. Here we're using the 4-hour time frame to map out our narrative for last week through this week. So that was why this was like this. So I actually didn't. So on the 4-hour time frame, this is all of this last up close candle before the energetic move downward. This was the other block. 4-hour bearish. So this was where price traded to yesterday. I went lower. If you watched last week's stream, we are currently bearish for the ES, for the indices market and the foreign market as usual, because we're expecting a higher dollar, which signifies lower prices for the indices. So this was what happened. So for the market structure, so after price took out these highs from Thursday, from 21st of March, after price took out the highs here on the 30th of March, price had a quick drop down in price and created this imbalance here. This imbalance is here. So when as this took place, this move higher, this rally higher, this is what pushed price. This pushed buy side liquidity that was resting here. So the early shots, the early traders that took short positions, their stop losses was here. So price rallied higher to take them out and had an energetic move lower. And when he did that, price traded up back into this imbalance, making this an intermediate term high. So every time price balances an imbalance, this currently here, balancing this imbalance here, this is an intermediate term high. So when you're trading with the intermediate term high in view, you do not want that intermediate term high to be violated. This was why the narrative for going into this week was bearish, because of this intermediate term high here. This would have been your hypothetical stop loss, that is 5255.9. Let's say 5256. So you'll be trading this order block here, because since this is the intermediate term high, every move higher, every rally higher, you see that as price trading, trying to balance this imbalance, because price does one of two things: either to go for a form of liquidity, which is buy side or sell side liquidity, or price goes to balance imbalances that have been created. So that was the narrative going into this week. So this was created here. So all of this rally here, when price traded back into this fair value gap here, all of this rally going up was to balance this imbalance, and this imbalance has been balanced now, because price offered sell side liquidity here, lacking in buy side delivery. So this is a SIBI, and the SIBI means SIBI, that is SIBI. The SIBI is sell side. Let's dive into this. The SIBI is sell side, that is SIBI. SIBI meaning sell side imbalance. Buy side inefficient. So what does this mean? When you say SIBI, when you reference something as a SIBI, when you reference a form of imbalance as a SIBI, SIBI is a down close candle that is an imbalance. So when price rallies, when price drops lower, price is offering sell side delivery. That is the sell side, the imbalance is on the sell side, and it's inefficient of buy side delivery. So when the sell side is, let's use this. So let's say price is trading like this, then a quick drop like this. So price leaves pockets of price action inside of this drop that was created. So when these drops were created here, this became the sell side imbalance. The imbalance is on the sell side. That is, price is lacking in buy side delivery, because for a range in price action to be balanced, price has to offer both sell side and buy side to make it a balanced price range. So because it is lacking in buy side delivery at a future time in price, where price is expected to trade back up into this CB to at least fill 50% of it. It doesn't really have to fill 50% of it most of the time, but the narrative in play in that body of price action will determine how much it should fill, how much buy side should be delivered. So back to the CB. So when price dropped lower, it was lacking in buy side delivery. So at this future time in price was expected to trade back up to a premium price, to a premium PDRA. So that was a tongue twister. So the premium PDRA here was this bearish order block. So that was what price did and dropped lower. Let's take this off. So this is what it did. In this body of price action, from this range high to this range low, this is 50% of this range. So every premium PDRA here is every premium PDRA here is a premium price level to expect the rally higher to go to. So what price did was rallied higher to this bearish order block after taking out buy side liquidity and dropping down for the sell side resting here. We are actually from a higher time frame narrative, there are relatively equal lows here. So for my long term this is the pool of liquidity I'm interested in. So this is the pool of liquidity that I'm currently interested in, because the traders that went long from here, traders that went long here, and also here, they would have trailed their stop loss here. They would trail their stop loss here, which is above this imbalance here, this BC. This is one full BC. In a higher time frame, this will just be one candle. So all of this BC is lacking in sell side delivery. So this is a BC, a buy side imbalance, sell side inefficiency. Sell side inefficiency. What does this mean? So when we have a up close candle that is an imbalance, it is lacking in sell side delivery because the imbalance is on the buy side. Like you can use the previous explanation for the CB. Just invert everything for the BC. So that was it. So we are currently price is currently interested in this relative equal lows because it has an imbalance here below it, right below it. So we are currently interested in that. So let's focus on today's price action. That is enough for the long job on. So let's take all of this off and just draw this out in time. Yesterday was a large range day, so we should expect choppy price action. Even though it will be choppy to the downside, it will still be choppy price action. So you should be moving your expectation and price delivery. So price traded to this here. Its price is expecting the upper portion of this 4-hour BC, which is the narrative in play. The body tells the story, which is the narrative that is in play. These weeks are just for doing damages. So okay. Our targets for our fib is corresponding with this liquidity from this sell side, which is 550.8. This is the relative equal lows from the 4-hour time frame. And it's corresponding with this BC that we outlined here from the 4-hour. So this is a swing projection. It's a swing projection model. So you should be in here 10 by liquidity because you're not interested in taking longs. Because dollar is expected to go higher in the higher time frame. So if the dollar is expected to go up, you shouldn't be expecting lower prices for the indices. So we should expect price to trade within these imbalances. But let's see how it does because it has been trading inside of this imbalance since yesterday after the drop lower. After dropping lower after CPI. After the CPI is dropped, we've been ranging inside of these imbalances, which is the 1 hour BC and the 4 hour BC. We've been ranging inside of it. Failed to take out this buy side. Take out this. Take out sell side. So this is what we have. The ranging price action. Let's check the Nasdaq, that is the US 100. Price action. Price action has been ranging like 9 p.m. So this is the swing highs. Projecting to the slows, swing highs and the swing lows. We went just a little bit above this equilibrium. From discount to premium. Premium after discount. So we're ranging. So if we should be interested in this BISI liquidity here, which is inside of this 1 hour BISI, this fair value gap here from 5 minutes should be an inversion fair value gap. That means we don't want price to take long inside of this fair value gap. To just spend a little time here and act as support and take price higher. Because we are currently playing inside of this BC, the 1 hour and the 4 hour BC. So if you want to look for the range in it, this is the range. So we should at least trade up into the midpoint of these pieces, and the midpoint is 5. You can barely see all of this. Let's make it this is good point. So we should at least trade up into the midpoint of this BC, of these BCs, that is combining the 4 hour BC and the 1 hour BC, since we are currently ranging inside of it. So this type of move in price action, we see it as a fake out, like a fake move. But you want to measure the wick of it, because that wick is currently an imbalance. So wick is the consequent encroachment. So you want that consequent encroachment to act as an inversion, like an inversion form of PDRA, and trade back up into it. This is narrative in play. If everything is true with the information being presented, it should move like that. But there is no dogmatic viewing of price action in this community. So what's currently happening? Before 8:30 opening price, where the news embargo usually does take place, price created a low here, took out that low at 8:30 and rallied higher. So this set of down close candles is currently bullish other blocks. So if you measure the other blocks body, the midpoint of it is the midpoint of this other blocks is the mean threshold. So when price traded to it and through the midpoint of the other block, but the bodies didn't trade lower. So this is indicative of price expecting this bullish order block for now, because there's no higher time frame narrative wanting us to be, that should be like sending us to higher, to should be expecting higher prices for the indices market. So every long play is a short-term play. No long-term expectation in price. So if you're enjoying this screen, you know what to do. Leave a like. So I know you guys are enjoying this stream, so we'll be doing more of this. So we're currently at the low of this 4-hour BC. So we want to see price react from it. We want to see price react from this low of this 4-hour BC to at least the midpoint of the 4-hour BC. So yeah, this is too much fibs on my price on my chart, but it's okay, just to illustrate what I'm trying to do. So from this price point, to this midpoint of the 4-hour BC is 9.3 handles. So if you're going for your 5 handles, take out your 5 handles and you're out. So let's take this with you. So if you go below this 3 minutes time frame, you see how price should act as support, as resistance, broken down into support from this constant encroachment. Yeah, but I don't want to go below 3 minutes time frame. So we'll be working with this for now. Taking price as it trades higher. Let's see the Nasdaq what is doing. So we traded into this fair value gap and valued higher. So you see this week here is the same reference point with the one on ES. So the same narrative should be in play there. So buy side is currently resting above here, at least. From this imbalance to here is about 70 handles. We've done about 40 handles, which is so this is what reading the tape is like. Should map out, which is mapping out PDRAs and expecting price to trade inside that PDRA with the narrative already established. The narrative should be established before the PDRA is being looked for. But you should be careful while doing that so as not to impose your will on price, because you have to trade what you see. But most of the time what you see is usually the magician's hand trying to deceive you, creating an illusion. Everything here you see is an illusion. Every candlestick is an illusion of previous price action. But if you're in the know, you should know how to, you can know how to use it to your advantage. Does that make sense? Like when you see someone trying to manipulate you, you use that form of manipulation and play a reverse move card back on them. So you see how price acted on this midpoint of the constant encroachment of this week. So it acted as support, as resistance broken, turn support. This is actual true support and resistance. It is PDRA. It is price acting on PDRAs according to how it is supposed to act, not a line, no support, no resistance, no. That's not how price act. It moves like this from support, turns, resistance. So remember the narrative for this inversion fair value gap. We don't want to segment time frame to be seen as a fair value gap. From the 5 minutes time frame, it is seen as a fair value gap. So people that trade just fair value gaps, like SMC traders, without that are lacking in narrative, they'll see this as a fair value gap from the 5 minutes to sell lower because of they think we are going to A this. Which price don't trade like that. If you get a rundown to this price point here, to be high here, it should be to become an immediate rebalance. So an immediate rebalance is price just this should be an immediate rebalance here. So you could predict PDRAs before it does form. So you watch the so we want price to at least get to this midpoint here, to this 5157.6, which is 5157.5 round figure. Okay, that's what's going on. Currently we are below this midnight opening price, so this is why the narrative for long, for higher prices is being supported, because we are also below this, we are below the opening price for midnight, and we are below the opening price at equities open, which is the 9:30 opening price. So as you can see here in the 3 minute time frame, you see the fair value gap here is not as clear as it is in on the 1 hour, on the 5 minutes time frame. So this is why you have to mark out your PDRAs manually, so as to see. I see people putting indicators on their PDRAs, like using indicators to plot out their PDRAs. That is actually more detrimental to your learning than beneficial to you, because you're creating a dependency on you're creating a form of dependency on indicators. And when you just click on the indicator to plot out your targets, your PDRAs and stuff like that, it will to lose the substance, to lose that I don't know, to lose that flavor that makes it unique, that makes it unique to you, how you're reading the price action, because everybody can just click on that indicator. If there's let's say 100 people using that indicator to map out their PDRAs, that means they are all seeing the same thing. And if they are all seeing the same thing, it's problematic because 100 people shouldn't be seeing price exactly the same. It should have those 100 people. They all have different personalities and different. They are like what word should I use? They are all in different states of mind. So because this candlesticks is like people's psyche. That's the best word I could use. This candlestick is like people's psyche. What has occurred previously with people's mind, inside of people's mind. So you don't expect 100 people should have the same psyche. It's impossible because their background, their upbringing, everything, like they are totally different people. So using an indicator to map out your PDRAs is I don't know. So we've got from the low of this 4-hour BC to and we are still rallying higher. This hypothetically this should be the take profit 1 year. That is the midpoint of the BC. 900 should be the take profit 1. So when we get to the midpoint of these BCs being the 1-hour BC and the 4-hour BC. If you're just joining the stream now, look at the beginning of the stream. So you see where we taped out these BCs from, which price is currently trading inside of, and using it to create a range bound market. So a range bound market is just price filling in imbalances. Price is continuously filling out imbalances. Like let's use this as a point of reference. So as you can see, from CPI yesterday, when price traded lower down inside of these BCs, price started rallying, creating a range bound price action inside of the BCs, inside of the 1-hour BC and the 4-hour BC. So price was going up, down, up, down, deep discount. This is a deep discounted price here. This is why we add this quick rally higher because we're far below this 4-hour BC. So this is why this rally took place like this. Because of we are below, not because of any news or anything. Because I know if you look at the economic calendar, let's see what's at 9:30. I knew there was a high impact news at 9:30. But the high impact news was not the reason for price to draw higher after this 8:30 year. It was because of these imbalances here. Because we've currently drawn down like below this imbalance here. Okay, 8:30 there was core PPI and unemployment claims, which were red impact news. Which was high impact news. I'm just noticing my trading pattern. I use the Fibonacci to highlight equilibrium price range a lot, like a whole lot. So as you can see, what's the time now? It's currently 10:51, 10:52. So we have like 8 more minutes on the stream. Soon as the stream gets, as we keep on going, and like be doing longer streams, like close to 2 hours stream. But for now, for these beginning stages, so we'll just be doing 1 hour or below 1 hour. So this new balance that we've been expecting here, that was not filled, it will now become a fair value gap here. So if price trade down here, we should expect a rally from here, because we have not reached our target, at least our target 2. We've reached our target 1, which is the midpoint of this 4-hour BC, target 2, which is the midpoint of the combination of the 1-hour BC and the 4-hour BC, while target 3, which is this buy side liquidity here, resting here because of the short sellers that are sold from here, that sold this early higher, sold this. This is a breaker. Price traded up into this breaker and dropped lower. So let's see what it does. This is what I don't want to see. Price staying too long inside of this inverse fair value gap from the 5 minutes. You should have just okay. So before 11:30, we want to at least see price trade inside of this fair value gap here, and have a value higher back here, at least here, which is 9.6 handles, and here, which is that. Oh yeah, yeah. New week opening gaps indicators are fine because you can't be plotting it every time. But even when you are using the new week indicator, even when you're using the new week opening gaps indicators, you should at least plot them manually after putting them on. So, like for example, let me show what I mean. I also have the new week opening gap indicator on. So let's use the 50-minute time frame to see. So let's say, so this is the new week opening gaps and new day opening gap indicator I use by Kryptonite. By so when you're using it, for example, to plot out new week opening gaps, you just you have to mark it out manually. Also, you just like new week opening gap I. This is not me telling you how to mark out your chart. You have to find the way how you do it yourself. So let's use a golden color for this. This is gold. Now this is more like an orange color. So new week opening gap. As like you still have to plot it out. So this all of the lines, all of the new week opening gaps won't be an impediment to how you view price action. So when you have the closest sets of new week opening gaps marked out, then you can turn it off so as not to impede on your viewing of price action. Because there's already so much distraction in price, so you adding in more distractions to your eyes to distract you is too chaotic. Except your attention span is very high. Like apart from that, I don't see a reason for you to leave it there. So when you have it all marked out like this, and then you watch how price trades within and around it. Just take it off because I'm currently not using it for today's illustration and price action. So I'll trade it in. So we should be trading inside of these BCs say at least 1:30 and be 1 a.m. because I saw there's a high impact news that will be coming up by 1:30 or 1 and I don't know 1 or 1:30 p.m. So if you are trading the afternoon session, you want to look out for that. Alright, thanks for showing up. It's 11 a.m. now, and that marks the end of the stream. So I really appreciate you guys here. So see you again tomorrow. Currently, I'll try and be streaming daily. So no more Tuesdays and Thursdays. So mostly daily, apart from Mondays. So I will not be streaming Mondays at all. So it doesn't matter if there's an high impact news, if there's a high impact news on Mondays or not, because I don't trade Mondays no matter the situation. So that's that. See you guys tomorrow.